Well, extending the unpredictability of 2020, markets charted quite an aggressive course through the third quarter. So obviously, we had the sell-off in February and early March as COVID gathered momentum. A remarkably quick recovery in the second quarter, and then in the third quarter, the market just continued its ascent through July and especially in August, with nearly a 10% increase in August, which was quite remarkable. And then all of a sudden, everything kind of rolled over on September 2nd for a couple of weeks. And after that September 2nd peak and the subsequent sell-off, we had a rebound into the end of the quarter. So, we sold off about 10% through September 23rd, and then just turned right around and started rising again. One of the things that continues to happen is that the index returns, specifically if you're looking at the S&P 500 index, the returns remained driven by the five largest companies by market capitalization, which of course are Apple, Microsoft, Amazon, Facebook, Alphabet, or Google, as it's more commonly known. Those five companies make up something like 22% of the index, and the price movement of those five companies alone influences the benchmark as much as the bottom 363 companies combined, which is really quite remarkable.
One thing that I think is useful to keep in perspective, and I've talked about this before, the era is in some way reminiscent of the 1960s, in particular the late 1960s. And the reason that I bring that up is not just because of the echoes of cultural issues, civil rights issues that we've had this summer, but also because that turned out to be the lowest volatility in the US stock market that we've seen really in its history. I think that juxtaposition of low equity volatility in a time of heightened political and cultural instability. We were in Vietnam, we had race riots, and yet the market kind of looked past that and didn't react. And so I think that perspective is worth having now, as we've had pretty good stock markets despite all that's happened.
The end of the third quarter marks an important and significant milestone as it represents the Amana Participation Fund's 5-year anniversary. This accomplishment reflects a concerted team effort and commitment to serve the community in providing an important asset allocation feature of capital preservation and current income that adheres to Sharia principles. We've taken added measures to reduce volatility by limiting exposure to procyclical sectors that may experience greater financial strain during this economic downturn. Among some of these include industries such as real estate development, luxury industries, tourism. These periods of financial stress call for greater emphasis on what are known as counter-cyclical industries that can help protect investors through allocations to industries better positioned to weather this storm.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.amanafunds.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information which you should carefully consider before investing about the Amana funds in a free prospectus or summary prospectus, please visit www.amanafunds.com or call 1-800-728-8762.